Is the stock market just not going to pay any more attention to rising cases, rising closures, or just about anything else because it's so transfixed on the fact that you do have a vaccine which literally could start rolling out here in the United States early next week?
I think the market is transfixed on December 31st and positioning ahead of that. So, we talked about the fact that with this November to remember we had in the equity markets in particular, that part of the Santa Claus rally may not occur this year because, again, and also we're seeing, potentially some pressure on consumer spending. I think that we're going to continue to see into the end of the year repositioning into risk on. We're going to see institutional portfolio managers looking to create a portfolio that makes sense with an improving economic growth environment in the second half of next year. I think the response and the reaction that you're speaking of is actually going to come in January when we start getting that December economic data. And people can get concerned. They can look at the fact that there's going to be 3 or 4 months of this deteriorating economic data. And I think we'll see a response in risk on markets, a more pronounced response to the one that we're seeing this week during those first few weeks of the year, And that could offer an opportunity to reposition for the longer term. But I think you're continuing to see this push and pull through the end of the year about this change in positioning, acknowledging the cyclical rebound, acknowledging the need to rotate to some extent your portfolio. But I am looking towards that January timeframe as when we see the actual real Wall Street response to what's happening on Main Street.
Yeah.